Hello and welcome to McCaffery Reserve Consulting's educational video on reserve studies. This video is intended to educate board members and property managers on the basics of reserve studies. Reserve studies are our business and we are always happy to answer any questions you have regarding reserve studies. So if you still have a question about reserve studies after watching this video, just type in your question in the box below on this website and click Submit, and we will respond by email. Or feel free to give us a call. A reserve study is a detailed report that assists common interest developments in planning for long-term common area repair and replacement expenses. A common interest development exists when there is an individual ownership of a house or condominium, along with the shared ownership or right of use to common areas. These common areas can include streets, roofs, recreational facilities, and many other items. A reserve study includes two parts. First, the physical analysis contains information about the condition and repair and replacement costs of the components that the association maintains. The physical analysis should include a component inventory and quantities, estimated useful and remaining lives, and estimated replacement costs. Second, the financial analysis evaluates the development's reserve, fund balance, and income. The financial analysis calculates the development's percent funded by comparing the actual reserve balance to a fully funded balance. The reserve study then estimates the total annual contribution necessary to defray the future costs. A reserve study is a detailed inventory of all the components that a development will need to repair or replace. It also lists what will need to be done to maintain these components, when this maintenance will need to be done, and what the cost will be. In addition, a reserve study calculates the required monthly contribution for each owner so that the needed funds will be available to perform the repairs and replacements. It also calculates how much a CID should currently have in its reserve account. A sample reserve study report can be found on this website. So why are reserve studies so important? Property values are directly affected by the level of maintenance and upkeep of the common area components. Reserve studies create a maintenance plan, which keeps the development in good condition, therefore increasing property appreciation and value. Reserve studies also provide an inventory of common components and a schedule for their repair and replacement. A reserve study assists the board of directors and managers in fulfilling their legal and fiduciary duty to maintain the community in a good state of repair. The amount of funds in the reserve account also greatly affects property values. Reserve studies inform common interest developments exactly how much they should have in their reserve account. In addition, prospective buyers require a current reserve study before they consider buying into a community. These days, almost all lenders require a current reserve study before they will give a loan to someone buying into an association. Reserve studies can also eliminate costly special assessments. Reserve studies can help avoid litigation against board members and property managers. Reserve studies also assure each member of an association contributes their fair share to the reserve account, so when expenses arise, the required funds are available. Some states, such as Nevada, require that an individual must possess a permit to perform a reserve study. California and many other states do not specify that an individual possess any qualifications to perform reserve study. So technically a board member or property manager could perform a reserve study. But in reality, it is not recommended. A reserve study should be performed by a qualified, independent professional. It can be a serious liability issue if the reserve study is performed by the board or management and puts all liability on the board and/or manager. Boards and managers typically don't have liability and errors and omissions insurance that cover the reserve study and are not qualified or able to defend its conclusion to homeowners, buyers, and lenders. There are also definitely conflicts of interest if the board or manager performs the study. Boards or managers may have agendas where they want the dues to stay as low as possible, or they may want certain projects done before others. We have seen many situations where managers have wanted to keep their clients happy, so they set the numbers in the reserve study to keep dues low. This causes deferred maintenance and in the long run ends up costing the association even more money and hurts property values. Boards or managers may also want certain projects completed before others because of personal preferences. In turn, they manipulate the reserve study to show what certain projects need to be done before others. Professional reserve study providers have years of experience performing reserve studies. They have worked with hundreds of associations, which gives them the experience they need to predict cost and useful lives of all the components. They also have experience setting funding plans that best fit each association. In addition, we recommend finding an individual with a great deal of experience in building inspection and a background in engineering, construction, and building observation. Reserve studies must be updated over time. Boards and managers typically change from year to year. If different boards and managers continually update the study, there's no consistency, and current boards may not understand or agree with the past board's study. Professional reserve study providers are consistent in the way they perform studies and follow standards that are set by organizations, such as the Community Associations Institute, or CAI. Every association is different, so every association will have different components in their reserve study. Associations and the reserve study professional need to come up with a list of common area components that the association is responsible for maintaining. Reserve components should have a predictable remaining life and replacement cost. Components should also be above a threshold dollar amount, which is usually around $1,000 for an average size association. Typical components include exterior painting, asphalt, roofing, pool, landscaping, and common fencing. Most associations have two separate budgets, one for reserves and one for operating expenses. A good rule of thumb is that any expense that is a monthly or annual expense should be included in the budget, and any expense that occurs every 2 years or less frequently should be included in the reserve study and reserve budget. So any expenses that are included in the operating budget should not be included in the reserve study. Some examples of this are insurance and utilities, such as water and electricity. Some items may be included in both budgets. An example of this would be landscaping. An association may have a monthly landscape contract that is included in their operating budget, but they may also have an expense in their reserve study to do major landscape upgrades every 5 or 10 years. There are 3 different types of reserve studies: Level 1, 2, and 3. A Level 1 study is for associations that are having their first reserve study performed, or for associations that are not confident about the accuracy of their previous study. A Level 1 study includes inspection of the property and all accessible reserve components. A reserve component list is then developed and the components are quantified. The reserve specialist then analyzes findings to determine useful and remaining lives and component cost estimates to complete the reserve study. Color pictures are included in a Level 1 reserve study. A Level 2 reserve study is for associations that have an accurate previous reserve study. Components are verified, but the report relies on the quantities and measurements from the previous study. A Level 2 study includes inspection of the property and all accessible reserve components. A Level 2 study satisfies all state requirements for on-site inspections. The reserve specialist then analyzes findings to determine useful and remaining lives and component cost estimates to complete the reserve study. Color pictures are included in a Level 2 reserve study. A Level 3 study is also for associations that have an accurate previous reserve study. No site inspection is performed, so the study relies on figures from the previous study. The figures are then reviewed and entered into our software, and the financial analysis is performed. A Level 3 reserve study can also be done from a component list generated by the board or manager. Every state has different reserve study requirements, and more are adopting legislation that requires associations to have reserve studies. California Civil Code requires that full reserve studies with an on-site inspection must be performed at least every 3 years. In addition to that requirement, annual adjustments and updates to the reserve study must be completed every year, and the information must be disclosed to the owners with the annual budget package. As of July 1st, 2005, there is a specific assessment and reserve funding disclosure summary form that must be included every year with the annual budget package. This form was updated in 2007 and now requires a percent funded projection for the next 5 years. This calculation cannot be done without a current reserve study. Starting July 1st, 2009, California Civil Code requires that associations adopt a reserve funding plan and that they include it in their annual budget, along with their reserve study and reserve funding disclosure summary. The Reserve Disclosure Funding Summary is a form that required to be sent out every year with association's annual budget package. It basically summarizes the results of the reserve study and indicates whether an association's current budget will provide enough money to cover reserve expenses for the next 30 years. The form should be updated every year and cannot be filled out correctly without a current reserve study. When looking at a reserve study, one of the most important numbers to look at is the percent funded. Percent funded tells you how strong your reserve balance is compared to the depreciation of your components. It compares your actual reserve balance to what your ideal balance would be if you had saved 100% of the depreciation of your components over the life of the property. Let's take a look at how this is calculated. In this example, we will use a boiler with an estimated cost of $10,000 that has a useful life of 10 years and has been in service for 6 years. The owner has $5,000 saved for the boiler's replacement. The replacement cost multiplied by the number of years in service divided by the useful life gives you the fully funded balance. So $10,000 times 6 divided by 10 is equal to $6,000. Percent funded is equal to the amount saved divided by the fully funded balance. So $5,000 divided by $6,000 equals 83.3% funded. For each association, you do this for all of their components and add them up. Then compare it to their total reserve balance to calculate their percent funded. The higher the percent funded, the better off your association is. As the percent funded increases, the risk of special assessments and deferred maintenance decreases. Many people ask what is the average percent funded for associations. The answer is that every association is different, and we see associations in all situations, from 0% funded to well over 100% funded. Some also have the misconception that associations must always be 100% funded. While it is ideal for associations to be 100% funded, with a current and accurate reserve study, associations can plan for future expenses using a cash flow funding plan and still be fiscally responsible at a level below 100% funded. In general, it is thought that the following describes an association when it comes to percent funded. 0 to 30% funded is considered poorly funded. 30 to 70% funded is considered fairly funded. And above 70% funded is considered well funded. Reserves can be funded by either special assessments or monthly contributions made through member dues. It really makes the most sense to fund reserves through monthly contributions because that ensures that each member will pay their fair share regardless of how long they own property in the association. However, some associations prefer to keep their monies in their personal bank accounts and levy special assessments when money is needed for large projects. It is always important to look at an association's finances and reserve study when purchasing into a homeowner association. The reserve study will tell you if the association is adequately funded and if you should expect special assessments in the future. Some associations do also choose to take out loans to fund reserve projects. This is usually a last option because it will end up costing the association more because of the additional interest that they end up paying. We hope this video has educated you on the basics of reserve studies. If you have any further questions, please don't hesitate to contact us. Reserve studies are our specialty, and we truly are experts. We hope you will consider our company whenever your association needs a reserve study. We perform reserve studies for all types of associations, big and small. You can find more information on our company on this website. We hope you will also take a look at our sample report, and you will see that it is not only very professional and informative, but very easy to follow and understand.